Details of the tax credit. The tax credit, it's a one-time tax credit, so you can only use it once. To an eligible donor, it qualifies for 55% off your state tax return. So you also get to count it as a federal charitable deduction. That's just your state portion that you get. That's what makes it so attractive. You can carry them forward for 10 years. So if you were to purchase tax credits this year, thinking, well, maybe I'm not sure if I'm going to use them, I don't know if I should purchase them, you've got 10 years. Now, if you get to the 10th year and you still haven't used them, you can transfer them to somebody else. They're fully transferable. So you never run the risk of actually losing that tax credit. Eligible donors, it's almost all businesses, corporations, LLCs, anybody that just files a regular 1040 is not going to qualify for a tax credit. If you file a 1040 with the rental income schedule, you do qualify. But anybody that just has a W-2 and a 1040 would not qualify for these tax credits. There has to be a business tax return to qualify for the tax credits. And that would be if you're filing on a Form 1120, a sole proprietorship, a farm operation, rent or royalties income, small businesses, banks, credit institutions, insurance companies, S Corps and C Corps. So all that said, I know that's a lot of information. I thought I would do a breakdown of an example donation and kind of how that looks. So, there we go. So my example donation is on $10,000. And I thought I would just subtract everything and then come to the bottom line so you can actually see in dollars and cents what it equates to. So $10,000, you're going to get $5,500 off your state tax return right off the bat. And if you don't have that much in state tax liability, that's just going to carry forward. So you won't ever lose it. You get your federal charitable deduction. I used an example of 21%. This tax bracket, you would have to consult with your tax preparer on that. But this is probably an average of where most people are going to fall. So you're going to get $2,100 back on your federal tax return for making that $10,000 donation. Then in addition to the Missouri tax credit, you're going to get a Missouri charitable deduction of 6%. So you're going to get an additional $600 off your Missouri tax return. And that's just the difference between a tax credit versus a tax deduction. So that equates to $8,200 you're going to get on your tax return. So you've made the donation in April. You're going to file your tax return in January. You're going to get $8,200 of that $10,000 back. So really what you're out of pocket is $1,800. With that said, Rick and I spoke to somebody who actually brought something up to us that got us thinking a little bit further. If somebody has stocks that you want to donate, so eligible donations are cash, real estate, stocks, professional services. Stocks being one that I think could potentially be the most beneficial. If somebody has stocks that they have if they cash them out, they're going to have to realize a large capital gain on those. You could donate those stocks. You would donate them at the value that they are. You would not have to take the capital gain. You would still get all these tax deductions. So depending on what that capital gain could be, if you had a $5,000 stock and it's now $10,000 and you cashed it out, you would have to pay 15% on that $5,000 that you made money on. If you donate that $10,000 stock to us, you don't. You don't pay that 15% and you still get all these tax deductions. So the example here is probably a more conservative example, depending on your individual tax bracket, tax situation. You could really utilize these credits to relieve some tax liability. A couple of things that I'd heard from some people that have donated for tax credits before or are interested, is they've run into the issue of they're going to pay the federal government, or they can go through this route and keep the money here in their community, serving people that with an agency that we know we're doing what we say we're doing, rather than sending that check to the IRS. And most people, given the choice, would prefer to do that. It doesn't in any way, shape, or form take away from donating. Sometimes I think if we go on and on about the tax credits, I definitely don't want to take away from the philanthropy piece of that. But it is just an added bonus, and Missouri does this to encourage people to donate back into their community, and to preserve affordable housing and to do these things. There are other tax credits out there. There's neighborhood assistance tax credits, there's youth tax credits. Most of those are at 50%. So ours being at 55%, we've been told before that we kind of have the best tax credits. Because that extra 5% can be quite lucrative. These tax credits are a way that somebody that's already wanting to participate in the community and donate, it's a way that it's not such a huge financial burden.